welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition where our focus is on Suzlon Energy. The renewable energy solutions provider Suzlon Energy on Friday reported a nearly 21% decline in the consolidated net profit to 254 crores. Mainly this was due to some exceptional items which we will understand from the guests joining in. So Suzlon Energy's EBITDA for the March quarter increased by 54% year on year at 357 odd crore rupees. Margins expanded by 260 basis points to 16.3% as well. Suzlon has also mentioned that it closed the fiscal year 2024 with its largest ever order book at 3.3 gigawatts. The cumulative orders as of May 24, 2024 are about 3.3 gigawatts, and this includes the order book as on March 31st of 2929 megawatts as well, plus the secured subsequent 402 megawatt order as well. The total income for the company rose to 2,207 odd crore rupees in this quarter versus 1,699 crore rupees reported in the same period last year as well. To decode for us what really went positive for the company in this quarter as well as the entire fiscal year and what's the outlook ahead, I'm now joined by the top management of the company. Mr. Himanshu Mody joins in. He's the CFO of Suzlon Energy. Warm welcome to you, sir. Thank you so much for taking the time out for this discussion. To begin with, a lot of our viewers are still confused about why have you reported a dip in this profit, and you've talked about certain exceptional items. Could you explain that in greater detail and also tell us that if this is a one-off, do we see an improved profitability from Q1 onwards?
So hi, first good morning to your viewers and yourself. So just to clarify, there is no dip in profits. In fact, there is a substantial increase. Our Q4 profits for the previous year was about 68 crores before exceptional items, which is about 281 crores in Q4 of FY24. So that is actually almost a 4x increase in our net profitability for quarter-on-quarter basis. To see the true quarterly performance of any company, you will need to see the item which is before exceptional items. The 250 crores exceptional item that was there in Q4 of last year was on account of a debt write-back of one of our international subsidiaries, which was written back into the balance sheet, which was a very significantly prior period item. So when we look at operating parameters, the two numbers to compare are 68 crores from Q4 last financial year to 281 crores of Q4 in this financial year, registering a 4x growth.
Okay. Now, sir, during this year, Suzlon has commissioned projects worth about 882 megawatts. That's a 78% growth over last year as well. What is the kind of visibility that you have for the new fiscal year now?
So as you said earlier in this interview, about 3.3 gigawatts is what we have as order book, which we need to execute over the next 2 years. We are also in advanced stages of quite a few other orders to be negotiated and closed with our customers. So whilst I can't provide you a specific guidance on what the company will do over in next FY25, but suffice it to say that we are in a very good position to not only meet our market share but also try and increase.
Right. So since you did point out that largest ever order book is something that you posted in FY24, what is the visibility? Do you have visibility of orders like you said, you're already in talks over and above this? What could that be?
Yes, so definitely there is, strong visibility of orders over and above this, which we shall report to the street as and when we sign those.
Okay. What about execution, sir? You've talked about this largest ever order. What will be the time period of the executable period, probably, of this kind of orders? Because so far, brokerage houses are pointing out to an underwhelming number when it comes to execution, even for FY24. I think about 800 megawatts is expected, but that has not really happened. Could you detail for us what is your sense as far as execution is concerned?
So again, if we look at the wind industry overall, the industry has grown about 43% to about 3.3 gigawatts this year from 2.2 gigawatts last year. Our sense is that in FY25 we should be able to do about 5 gigawatts as a country of wind installations. Now, whatever market share we're able to grab of that 5 gigawatt pie is what we'll be able to do at Suzlon. So I don't want to give any specific number, But I think from a project execution perspective, if we are able to do five, that itself will be a 50% growth from what we would have ended FY24 at. So there is a substantial increase year on year on project execution as well. It may be slower than what people want it to be, but I think it is on the right direction.
Okay, but you've also gained market share in FY24, sir. So, do you expect a further, surge in that? In case that really happens, how much of this 5 gigawatts as a country will you be able to aim?
So again, difficult for me to answer that question. Yes, we have gained market share in FY24 to 27%. Whether we gain further market share in FY25 or are able to maintain the same is something that time will only tell.
Okay. Right. As far as competition is concerned, sir, how is that really building up in this space? Because everybody knows that renewable energy is the next space to be in. Are there newer players now entering in? And is that also creating some kind of, a monitorable space for you at least?
So yeah, certainly. I mean, there is healthy competition in the space. I mean, we have a few turbine manufacturers from the West, from China as well, who are entering into India. But there is room for all. I mean, from our perspective, Suzlon is the only turbine which is tailor-made for Indian conditions, and Indian climatic conditions are quite different from anywhere else. So I think we have our product USP very well carved out, and we are confident that no matter what competition, we should be able to maintain a fair amount of market share.
Okay. So, also if you could guide for our viewers for FY25, what is your ambition and internal target for, say, a revenue and even for EBITDA?
So again, sorry, I cannot provide any guidance. As a policy, we don't provide any guidance to anybody.
But will you be growing better? Will this FY25 be an even better year as far as top line and EBITDA growth is concerned for you?
That definitely is the expectation and hope, and that's what we all work for. So, I'm sure we'll be doing better than FY24 and setting new benchmarks. How much more better is something time will tell.
Right. On the margins front also, you have reported a considerable amount of growth, but with the commentary around commodity prices now changing, and there seems to be, risk of higher prices coming in, will there be a pressure, and probably a capping on the upside that you have, probably on the potential of the EBITDA margins?
So, look, for our manufacturing business, we've always done a gross margin of 15 to 16%. And this year, we reported 19.5% contribution margin on that business, which was on account of muted commodity prices. So even if the commodity prices were to increase a bit, we'd still be able to maintain our margins at mid-teens, which has always been the trend or the case in the past few years also.
As far as your O&M business is concerned, what is the kind of margin outlook that you can share with us here? Because I want to ask you, because there is slowly and gradually an increasing pie of the O&M business when it comes to the contribution to the top line as well. Is that going to be the way that we are going to be looking as growth?
So two things. One, of course, our operating profit margins for the O&M business should continue at about 40%, which has been the case historically. And in the overall pie, the share of O&M business would go down because, as and when we increase our manufacturing supplies, like from 710 this year to whatever we do next year, the percentage pie of the O&M business in the overall will definitely reduce.
Understood. So you've also ended the year with a net cash balance of about 1148 odd crore rupees. What is your plan? How are you planning to deploy this cash going forward from here? Do you hope to sustain this cash flow going forward from here, or do you already have plans to deploy it?
So of course, this cash will be used for our working capital purposes to meet out the order book demand that we have. Also, there it will be used for some capex that we're looking at in this financial year at our end.
Okay, well, fair enough. Thank you so much, sir, for speaking to us on Business Today Television. All the very best to you for the upcoming quarters as well. And here's hoping that we can get you back on Business Today and on Market Today to really understand and have our viewers listen from you. What is your plan as far as the growth vision is concerned? Thank you.
Thank you. No problem.
Thank you so much. So with that, viewers, we wrap up this very special conversation with Suzlon. They've explained that on the prima facie level, what you see as a dip on the net profits is definitely not so. In fact, they have grown. This is because of an exceptional item. Going forward, there is a visibility on the countrywide basis of a 5 gigawatt kind of a performance that you could be looking at adding, and within that, they definitely hope to have a sizable portion too going forward from here, despite the increasing competition and probably the commodity prices at headwinds. They continue to hope for a better year when it compares to FY24 in FY25. So those are the key points that we've understood from the conversation. Many thanks for joining in, but do stay tuned on to Business Today, as we will continue to get you more earnings conversations as we inch towards the fag end of the Q4 earnings now. Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra, and this is a special edition where our focus is on the IPO